Hello and welcome to Exchange Traded Fridays. It's a weekly roundup of markets and ETF news. My name's Sean. I'm editor-in-chief here at ETF.com. And wow, do we have a fun episode in store for you today, because this week we're diving into everyone's favorite topic at the moment, AI, ChatGPT, other new hard-to-pronounce acronyms, I'm sure, and how that technology is not only the shaping the future, but much more importantly for us ETFers is how we can use the technology to invest, in that future, and some of these companies that are forging this technology, which is certainly an area with very high potential, and then just how the technology is actually selecting stocks and actually kind of the future of investing in for a lot of people's views. According to ETF.com data, there are about 30 ETFs traded on the US markets that have exposure to AI in various different ways. They have assets under management of about 6.31 billion. So certainly a growing opportunity, a growing area of the market. The average expense ratio is around 72 bips. So again, not the cheapest on the market to say the least. A lot of those are actively managed. And this week, however, we brought in Jake Hanley. He's managing director, senior portfolio strategist at Tucrium, which obviously deals with a lot of commodities ETFs. They have a few AI-driven strategies that passively track indexes. I believe we'll jump into that a little bit later, but want to welcome you in, Jake. Thanks for being here.
Yeah, thanks for having me. Excited to talk AI and investing for sure.
Sure, absolutely. So of course, there's no other way to start off this podcast but by me asking ChatGPT, obviously, to create the best possible ETF. Obviously, ChatGPT said, I'm a robot, you're an idiot, I'm not going to give you any recommendations. But when I asked it to create a market-beating ETF, it said the market is just too hard to predict, which is true.
Yeah.
However, there are some ETFs that are aiming to do just that. We wrote a story a couple months ago on one from ETF Managers Group. It's AI-powered equity ETF, AIEQ, that had been claiming to do that for the year. I think one of the most recently launched ones is Van Eck Robotics ETF. I bought that launched last month. So some of these ETFs are investing in the theme of AI, and some of them are actually using AI to create their ETF.
That's right.
So Jake, maybe you can just kick us off here with we hear so much about AI, right? And that possibly people are going to, everyone's going to lose their jobs, and that, it's going to transform, and, robots are taking over, and it's, the Matrix. What is kind of AI, if we can just take a step back, and then, how impactful are these revolutions? What's your view and Tucrium's view on the technology?
Yeah, that's awesome. It certainly is an exciting time. Anecdotally, literally before this interview, I was on a field trip with my daughter's second grade class, and we went to an art gallery, and the exhibit was AI generated art. And I didn't know that's what I was walking into. So talk about disruptors. I mean, this is a very nice art gallery in downtown Burlington, Vermont, where we're headquartered. And their leading exhibit was AI generated art. So really fascinating stuff. AI, to answer that most basic question, refers to computers' ability to perform tasks that requires human-like intelligence. And so that often involves making decisions. And that's where we see it really impacting the world of investing right now. Human like intelligence, conversations, right? Engaging in a two-way conversation. That's what we see with ChatGPT being a large language model. It's basically an ability for you to interact with the computer in a human way instead of having to type, fancy codes or something of that nature. You can simply type in, tell me what was the hottest day in calendar year 2022, and it could come up with something like that for you. So AI at a big level is computers becoming more human-like in their intelligence.
Mm-hmm.
Machine learning, importantly, is a subset of AI. And machine learning is using algorithms to review large data sets that inform the bigger picture AI, okay, inform the machine on correlations, some important, interrelationships between different data sets. The fancy word here is neural networks, right? All this data gets crunched, and that's part of the machine learning component to crunch all that data, come up with a decision, and then say, was that decision the right decision or not? Right. And if not, now I have to change how I go about viewing that data in the future. So that's the machine learning component to it.
Interesting. Yeah, I used I probably shouldn't admit this, but we had our ETF.com awards ceremony or event on Tuesday night, and I just gave a brief speech to kick us off. But I actually used chat. I just said, "How can we create a speech for an ETF.com awards show?" And it literally kind of spit out a framework of how to do that. I mean, it's really quite interesting. Where do you see? I mean, I didn't use it word for word, obviously, but it gave a pretty solid framework.
Yeah.
So where do you see the most impacted sectors, like broadly, in terms of how this is going to change or shape the future?
Oh, well, I think, you hit the nail on the head. One of the most intuitive, places there is just that content creation. And I heard recently that the writers in Hollywood are going on strike, or were thinking of going on strike. I don't know if they still are, because they're worried about losing their jobs with this type of technology. I've used ChatGPT to say, write me a bedtime story for my 3-year-old son who really likes Spider-Man. Okay. And it wrote a bedtime story about Spider-Man. Right. So I think writing and content creation, that generative side of things is where it's really exciting right now, where you can give the machine an input, ask it to do something, and it generates an output for you. So at the art gallery, that was a visual impression, in content creation, in written words, essays, and things like that. That's where we're seeing the most impact right now, because that's the technology that's broadly available to us masses at the moment. Okay. And so it's really important to go back to November 30th when ChatGPT first came out. I think it really took a lot of people by surprise at how advanced this technology is already today. And that's why there's so much excitement and such a buzz around this, because people are using ChatGPT and testing it out and realizing, holy cow, this has some real powerful impacts, some big potential to really shake things up and to be a massive disruptor. And so initially, I think it's that the content creation side of the business where you're writing a lot. Certainly, if you're reviewing legal documents, you can copy and paste into ChatGPT, right? And it will give you the highlights and the key points. Things of that nature. In the professional content creation industry, I think is where it's going to have the most impact near term. That said, to tie it to investing, what a lot of folks don't realize is that machine learning has been used by hedge funds, institutional investors for a long time now.
Yeah.
This type of technology, it gets more advanced every day, but it's not necessarily new technology. Okay, it's ChatGPT is new to all of us, but the idea of using machine learning to help create and help manage a quantitative investment strategy, that's not new. That's something that's been going on for a while, and we can talk more about that.
Yeah, before we dive into that, which I think is going to be super interesting. So how, for those of us that don't know, how does ChatGPT do that? Like I've had it explained to me, like it's kind of like you're Googling something, except ChatGPT just like scans all of like the internet, I guess, and then takes up the ones the pieces that you need and creates something. Can you just give us a brief description or explanation of what's going on behind the scenes?
Yeah, sure. To the best of my knowledge, in a kind of layman's way, and importantly, I did misspeak earlier. I said, what was the hottest day in 2022? ChatGPT has been informed by a data set going up to 2021 or through 2021. So it's really important to note that right now, at least the model that's available in the United States is not connected to a browser real time. So you can't say, hey, what was the stock? What did the S&P 500 close at yesterday? May 3rd, 2023. Okay. It doesn't have that up to date data. So what happens is you're typing in a question, and the computer is going back through reams of data, all the whatever's been uploaded into ChatGPT, including all the web-based data that was available all the way through 2021. And it's using really advanced neural networks is the way to describe it. If you can think of, this idea of little circles all connected by little lines, kind of like what an atom looks like, right? Those old molecular models that you would see in your science class. Those are neural networks, and the machine is just going through trying to find the data that most closely aligns with what it thinks you are asking. Okay. And once it finds that data, it produces the output. And, the more specific you get, sometimes the better results. Sometimes, the broader you get, it doesn't find exactly what you're looking for. So there's actually a new industry out there. If you follow this AI stuff on social media, there's a new industry that tells you how to write ChatGPT prompts. People will sell you an ebook. These are the best ways to talk to ChatGPT. But basically, all it's doing is it's reading what your input is, interpreting it, running it against a data set, and spitting out what it believes is the best answer based on all the data that it has available to it. Which is truly tremendous because it happens instantaneously, as you saw with writing that script.
Yeah, it really is quite impressive. Okay, so we get a little bit now of what it's doing. So, and we know we've had the algos and at the hedge fund, and you mentioned all that. Maybe we should dive a little bit into that. So, how is AI being used to beat the markets?
So I love how you open that up too, saying, I try to ask ChatGPT to make me an ETF that can beat the markets. The reason the machine can't do that yet is because financial markets are so noisy. Right. And we know that just by, turning on the TV and reading the Wall Street Journal every day. There's a lot of noise out there. So what is it that you actually need to focus on to gain an edge in the marketplace over a specific time frame? And timing is always important, right? What's your investment time horizon? Is it today? Is it a week? Is it a month? Is it 30 years? Okay, so that's really important. The idea of there being too much noise in the markets. That said, kind of as we were discussing, when you put in a command into ChatGPT, the more specific you can get, the better the output. So if you're focusing on a specific sector or a specific stock or a specific commodity in our case, then you've limited the amount of data that rationally or reasonably should be impacting the price of that security. Okay, so let's take, for example, soybeans. All right. Really exciting to talk about soybeans. I bet you didn't think you were going to talk about soybeans today. But the soybean market, okay, there's a lot of fundamental factors that impact soybeans. The biggest one probably is weather, right? And so if the machine is going to look at the history of soybean prices, one of the factors that has influenced the history of soybean prices is absolutely weather. So the machine could say, hey, soybean prices have spiked, back in 2010, 2011. What was going on in that time frame? Well, let's look at the weather from back then. Back then, we had back-to-back years of La Nina. Interesting. Do we have a forecast that says there's a La Nina coming, perhaps, right? So that's the type of modeling that's going on, but it's not just weather that's impacting soybeans. It's what's the value of the dollar? What are corn prices doing? Right? What are the correlations between soybean prices and shipping costs? So there's a ton of factors. Even though we've limited the noise to just the soybean market, there's still a ton of factors to consider. Now, the machine's really good at going through and running, the fancy word is a multi-factor regression analysis, going back through history to see which of those factors and which relationships seem to have statistically have the highest impact on soybean prices. Okay. And that's the way that the machine has been used. By the way, what we're really talking about here is quantitative modeling. So you have quant portfolio managers, et cetera, et cetera. Right. The advantages from the machine is that the computer can process vast amounts of data faster than a human or a team of humans ever possibly could. Okay. And so in strategy design, that gives you an edge, but also in running the strategy using that machine learning on a go forward basis, okay, where the machine puts out a decision, was it right or wrong to go long or short soybeans, okay, and the machine's going to learn from those decisions going forward.
Mm.
Uh, so, not necessarily beating the broad market, so to speak, but hey, can we make money in the soybean market on a consistent basis using this type of technology?
Yeah, it's not about broad market. So it's really the quant kind of strategies because I remember I did a story a few years ago about that, and they were using, I think it was Fidelity, they were using satellite imagery to look at oil tankers in like the Gulf, of wherever in the Middle East, and to see how high they were off the water in like millimeters and inches to see how much oil they had, to see what the reservoirs of oil were going to be, and then how that would affect oil prices. So yeah, I mean, it's really crazy about how technical and just what these all this data and information is doing to investing. So I guess I get what you were saying there is that it's bringing those quant strategies down into kind of more of an ETF wrapper that's more accessible, more available to your retail investors and cheaper.
Yeah, yeah, absolutely. And so that's the exciting part of where we are. We looked at the AI space, and just as everybody's getting excited about it, we're getting really excited about it as well. And the natural thought, I think, is to how can I profit from AI? Which companies, okay, are going to be making money by partaking in this AI revolution? And so a lot of times investors automatically think about, well, I need to invest in technology companies, okay, and I can make money as technology companies make money creating AI platforms, et cetera, et cetera. We took a step back and we said, you know what, we're going to dare to seize the future, if you will, and we're actually going to use the technology today because we believe it is advanced enough, as we've seen again through hedge fund strategies and so forth, where it's actually producing real world benefit for investors right now. And so we were introduced to a group called ILA Investments. ILA is a very interesting company. They are building financial indices and have been doing so for a long time using AI, using machine learning technology. And they have some very experienced commodities traders that are part of their teams. And they have these indexes that were launched in 2017, which is really interesting to us because, we talked just a moment ago about, running these machine learning technologies on reams of prior history, prior data, right? Data that's existed in the past to help the machine learn to create a strategy that you believe is going to work well in the future. Well, after you've built that strategy, you have to press go at some point, okay? And then the proof is in the pudding, so to speak, which just means after you press go, does that strategy actually produce the way you think it's going to going forward? And because the indices that we've licensed were launched in 2017, we had that track record, that actual performance track record of the indexes, not just a back test, published an audited track record for these investments, for these indices. And we were really excited about that. And so having that historical performance in the indices gave us confidence that this was a real life application of machine learning technology that works. And I always got to, be careful and say, like, past performance is not indicative of future results. And we can look at what's known as the ILA SO33 index. That index is the index behind our long short agriculture ETF. That ticker is OAIA. And, over the last 6 years, that index has returned 16.78% on average. Okay, that's a 6-year average. That's a 4-year average, 16.78% over the last 4 years. Well, year to date, it's down. Okay, and so there's times where current performance doesn't match historical performance. So you have to be careful with that.
Yeah.
At the same time, over time, we believe, given the historical performance of the index, that it was programmed in such a way that we have confidence that the machine will do well going forward.
Mm-hmm. Yeah, that all makes sense. And so you mentioned the ILA long short agriculture strategy ETF, and then you also have the 2 long short base metal strategy ETF. And so you said over the four years, it was up 16%. Some obviously it's not always going to be up, but over the long term it will. So with these, obviously the long and short and the kind of leveraged ETFs, what are the recommended? I mean, is there a recommended hold time? I know some of them don't you want to stay for certain periods. I'm interested a little bit about kind of what are the time horizons for these funds, and then also kind of what made you go with agriculture and metals strategies.
Yeah, no, that's excellent. So, really important. You mentioned leverage. Neither of these strategies use leverage. They have the ability to go long and short, but the portfolio is always collateralized 100%. So, what's to answer the question made us go for agriculture and base metals. Agriculture for us, that's really where our roots are as a company. We've been around since 2010 and talk about being niche and focused with the corn, wheat, soybeans, sugar, ETFs, providing exposure to futures markets through ETFs, again, going all the way back to 2010. And we were looking for a strategy that had the ability to go long and short. And again, getting back to the idea of we're pretty confident in our ability to manage commodity portfolios, but we've been doing it long only on passive indexes. Now we have a passive index that goes long and short, and with the historical track record there, that's what brought us to SO33, which is the ILA Long Short Agricultural Index. Base metals for us, it was looking at the ILA indices, another historically performing index that was attractive. And because base metals are in the news quite a bit right now, with green technology and so forth, we think there's a lot of interest in that segment. And so to have a strategy that can go long and short for somebody looking at the base metals part of the commodities market, we have that offering for you as well. And so that's really what we were looking at. And I think you had another question in there that I missed, Sean. Is there something else that you had asked?
Yeah, no, I mean, I think you hit it pretty much on the head, and so yeah, I mean, maybe you could dive a little bit more into. I mean, we spoke a little bit about the agriculture. We know, a lot of the two premium funds. Obviously, that's kind of the bread and butter. What did you see that interested you in the base metals strategy? Now, obviously, you touched on the green things and the EVs. I know have been big for two cream and others. What do you see there in terms of the base metals?
Yeah, so another component, and we're writing a piece for any financial advisors that might be tuning into this. It will be for financial professionals only. But this piece is looking at the concept of trying to help create performance results on a risk-adjusted basis that add resiliency to a portfolio. Okay, and so the big idea here being that last year was a tough year. Stocks and bonds are both down, right? And so a lot of folks are looking to incorporate commodities into their portfolios. When you look at some of the wider known commodity indices, such as BCOM, for example, those big indices tend to be underweight agricultural commodities, but also base metal commodities. So a lot of times the commodities indices are going to be overweight energies and precious metals. And so the paper that we're working on explores this idea of having broad exposure to a traditional commodities index like BCOM, okay, that is going to be overweight energies and some precious metals, and including these strategies as kind of satellite components as a way to get more weighting toward agricultural commodities, more weighting toward base metal strategies, but also incorporating the ability to go long and short to generate that alpha. And so the simple and direct answer to your question is both of these commodity segments are underutilized in our view when you look at the broad-based commodity indices. And so we think that there is the opportunity to incorporate exposure to these parts of the commodities market to help build portfolio resiliency. And by that, I mean, have exposure to different assets in the commodities world that zig when others zag, right? And that's the idea of helping increase risk-adjusted returns.
So how about obviously that we mentioned at the top, there's kind of two ways to go about this, right? The about AI investing, right? Using the actual technology, and then more from a thematic point of view, right? So how do you feel? I mean, what are your views on gaining exposure to the sector as a whole? I mean, obviously, I'm sure you're very bullish on the technology. Are there a lot of benefits for investors that want to kind of gain that momentum or kind of benefit from the future potential growth in the market?
Yeah, I think so. Looking back at the top of the conversation, there has been a lot of money. I think you mentioned, six something $billion in when you use the ETF.com screener. By the way, new website's excellent. So yeah, well done on that.
It was long coming. Yeah, we've been working on it for about a year or more now, so we're thrilled to have it up. And thanks for that. We're happy that it's getting some use from our
Yeah,
clients.
no, tremendous there, Sean. So well done. And I do think that this technology is disruptive enough where it is going to be um, something that folks can profit from investing in. Okay, and again, I am bullish on the idea that you can use it to invest with, such as the indices and the investment offerings that we're putting out there, using the technology to help you on your investing journey, and then investing in the companies that are building the technology. I'm very optimistic about the growth of the industry. We have to mention, though, too, I think, just today I saw a headline that the White House is having a summit on AI technology. It is moving very, very fast. Okay. And regulation has a way of slowing things down for better or worse, right? And I think there are some real concerns about just how disruptive this technology is, just how powerful it can be, in the hands of the bad guys, let's say. I go back to Spider-Man. Great power requires great responsibility, that sort of thing. And so as optimistic I am for the future, I do see hurdles that lie ahead. And of course, there is that little bit unknown. What if these leaps and bounds create true artificial intelligence, and what does that world look like? So there's that kind of unknown element as well.
Sure. Yeah. We'll have to see what the future holds. But yeah, I mean, any last thoughts before we get going? I mean, I know as you said, there's a lot of potential, some kind of things about being, responsible and making sure we're going about it in the right way. And how bullish are you on the future of AI?
On a scale of one to 10, I'm 100. This is as disruptive as the creation of the internet itself. For anybody that would be a skeptic of that, public service announcement: if you haven't tried ChatGPT, download it, try it now, and see for yourself where the world is going.
Yeah. Well, bigger than the internet. That's going to be, we'll come back and see if that works out. I hope you're right. It really, the potentials are just boundless. I mean, I was shocked when I tried it just a few weeks ago. So we'll have to leave it there, Jake. Thank you so much for your time. I really appreciate you coming on.
No, thanks, Sean. It's a pleasure. All the best.
We'll have to do it again very soon. Thank you, Jake. And thanks for everyone out there that was listening to Exchange Traded Fridays. Again, it's from ETF.com. If you'd like to go to your favorite podcast app, you can search Exchange Traded Fridays. We'll be there. You'll find us. For myself, for Jake, for the entire 2PM team, thanks very much for listening, and we'll catch you next week. Take care, everyone.